Welcome everyone. I am incredibly excited for the video this week. It's probably the most excited I've been for a video the whole time I've been putting things on YouTube. This week we're going to be going over IHS Holdings and their absolute dominance in any country that they operate in. We're going to be going over this company and in detail why I really like this opportunity right now. So with that, guys, we're going to jump right in. IHS Holdings, they provide mobile communications infrastructure services, and they have approximately 40,000 towers across 11 markets, including Brazil, Cameroon, Colombia, Cote d'Ivoire, Egypt, Kuwait, Nigeria, Peru, Rwanda, South Africa, and Zambia. Looking at what their market share is in these countries that they operate, you can see that their market position in so many of these is number one. They have over a 93% market share in 5 countries, and they are the number one largest provider in 7. Between those 7 countries, the total population they cover comes out to about 372 million people, which is just absolutely incredible. And when you look at their revenue growth over the past 5 years, because these countries still have quickly growing population or IHS is still expanding market share, both are happening in Nigeria, their organic revenue CAGR over the past 5 years looks incredible at 23.5% organic revenue growth. When you look at them compared to other competitors that they have, you can see that they're the 3rd largest in the world. Now, there is a pretty big gap between the 2nd and 1st, where you can see that they're at 40,000 and the next closest is over 100, and then American Tower's at 200, but they dominate the countries that they operate in. And on top of this, when you compare them to the global competitors that I mentioned above, IHS has a much better track record of deploying capital profitably. As you can see by their ROIC having a median of 11.43, where their average median of their competitors is 7.26% since they went public in 2022. I believe most of this is due to the opportunity in developing countries, but you can't write off the management's ability to capitalize on opportunity when they see it. This lets me know this company and their management knows how to fill gaps when they see them, and they're just operating in a market that's growing better and more profitably than most others, which is a very good thing to have. When you look at maybe some potential issues that they have, my only big concern is that other companies will come in and take market share from them. MTN makes a deal with American Towers to run its Nigerian towers. Now, if we go back to their market data, you can see their core tenants in each of these countries, MTN in many of them. And they recently, just as it says, they made a deal with American Towers, one of their larger providers, and the IHS previously held the contract for 2,500 mobile tower sites, but they were given to American Towers. MTN and IHS also in shareholder dispute over governance. So this is my biggest concern, and I wanted to address it and why it's actually not even close as big of a deal as it might seem like. So, first off, when you dig under the surface, you realize that the largest shareholder of IHS is MTN, that cell provider. So they have a vested interest that they aren't backing out of for IHS to succeed. And I say that they aren't backing out of it because they are not selling any of their shares. Since the last quarter, they did not sell a single share. And they have they're the largest owner of IHS, sitting at 25.5% of the company. So they quite literally have a financial interest in IHS doing well, and they're the ones that can give them business. So why would they be giving this business away? Well, I think this article and news kind of addresses that, and I'll talk a little bit about it as well. Last year, the IHS annual meeting devolved into a tense standoff over investor power after the tower operations dismissed demands from 2 of its largest stakeholders, MTN and Wendel, which I believe the two own over 40% of the company. In a statement yesterday, which this came out on July 2nd, I believe, Sam Darwish, chairman and CEO of IHS Towers, states, "I am pleased that the shareholders have supported our efforts and commitment to strong corporate governance and constructive shareholder engagement. That matter tabled and approved at this year's AGM are a result of our board's responsiveness to shareholders over the past year, and further aligned our interests with shareholders as we continue to operate with independence and neutrality among mobile network operators. With MTN Rwanda MLA just signed, we have now completed all contract renewals and extensions with MTN outside Nigeria, covering the 5 countries of Cameroon, Cote d'Ivoire, Zambia, Rwanda, and South Africa. A total of over 12,200 tenancies renewed or extended into the next decade. Not just a couple years, decade. So it seems to me the play to give American Tower business last year, or just a few months ago, was to show IHS that they were serious about the requested changes they wanted, and once IHS got that, they quickly adjusted their policies to what they wanted. It's like they said, the matters tabled and approved at this year's AGM are the result of our board's responsiveness to shareholders over the past year, which is when these problems kind of really started, was last year. And this year, they've already started to come up with resolutions and gotten them in place, not just proposed them, gotten them in place. And it seems to be working because they've gotten the approval of MTN back since they just signed over a decade-long deal on over 30% of IHS's total towers on July 2nd of this year. I certainly imagine there is more work to be done here, but there has been some very meaningful progress. And keep in mind, this was like my biggest issue with the company overall, and it's already getting resolved. So, with all that said, IHS is actually down 70% from their all-time highs, which probably seems a little confusing after you saw they're growing at 23+% a year for the last 5 years. They're the most dominant player in pretty much every country that they operate in, yet we're still down a very significant amount from all-time highs. The main reason for this pessimism has to do with the devaluation of their largest source of revenue, the Naira in Nigeria. Over the last 2 years, the Naira has lost over 72% of its value. You can see it's just been nothing but bad news, with having significant drops in valuation in June of 2023 and late January, early February of this year. You can see this devaluation pronounced pretty well in their free cash flow over the past 2 years, just having a steady tick down. I'm going to go over why this actually might not be as big of a deal as it looks like, though. The important thing to know is all I'm waiting for here is a stabilization of the currency. And the reason this is all we need is 97% of all their contracts are reset back to a USD or Euro constant each quarter or sooner. So as soon as there is some real stabilization in revenue, free cash flow will see a serious jump. You can see in this chart above, which I pulled from their most recent quarterly earnings slideshow, 92% of their contracts have a FX reset quarterly, 6% monthly, and 3% semi-annually. Now, moving on, the revenue breakdown from their most recent Q1 earnings call tells you the story of the last couple of years. They had 35% organic revenue growth year over year, but after you take into account the Naira devaluation, that switches to a 30% year over year loss. Because of the devaluation, they ended up losing about $400 million in a single quarter, which is a very big deal. And it's pretty pronounced when you look at a 35% gain to a 30+% loss. Had the devaluation not happened and their organic revenue growth fallen to free cash flow, this would mean IHS would have generated $224 million of free cash flow in a single quarter for an entire company with a market cap currently just under $1 billion. It should be painfully obvious why I like this company, but if it isn't, keep in mind this company often has contracts with cell companies that are decades long, meaning they are incredibly stable, which means the only ingredient missing here is the stabilization of the Naira. And when you look at this chart, you'll notice that about the last 4 months, things have gone and started looking a little more stable. you can see from end of February to early March until now, things are actually slightly up. Choppy, but overall up. And they reset at the end of every quarter. So this could be very good news. It certainly needs to be stable for a lot longer, but I am excited to say the least for this company's next few earnings reports, and hopefully the currency can stabilize for the long term. If we get that, then things will start to look good really fast. I hope this was really valuable for you guys here today. We're going to be moving on to answering questions from last week's video. If you have any questions, please put them in the chat. I am excited to answer every single one of these, and I want to provide as much value for you guys. I wanted to put a plug in here and let you guys know a little bit of a change that I'm making to my videos. In the past, I have shared really important, valuable lessons that I've been pulling from some of the greatest investors of all time for my own investing. And I share news and details on my own portfolio, what I'm entering, what I'm exiting, what I like, what I don't. And all of that, I'm moving over to a Substack, and I'm going to put a link down below. It's totally free. I want you guys to go in there, check it out, get that every single week. I'm going to include a lot of details and lessons that are helping me, and you guys should get a ton of value from that. Let me know how it goes, and I will see you guys there. So go down and find that, and now we're going to move on to answering questions from last week. First question from Ronaldo was asking if I own any PayPal, since it seemed like it was in my wheelhouse. This is one that I'm actually watching, though I would say they're not cheap enough for me yet. If they had 8% revenue CAGR over the next 5 years, that puts them at about $44.7 billion, and if they get a 23% free cash flow margin, a little above their historical median of 21.1 on that money, they will generate about $10 billion in free cash flow. At a 22 times multiple, that is a market cap of about $220 billion, which would equate to a 266% return or so from their current price. That is good for sure, but it's not enough for me to bump out any position in my portfolio, since they currently offer better returns than that, or they have higher conviction, most of them both. I would be more interested around $50, but my guess is because it's been laying a base for so long, things are going to start turning around, and I highly doubt it's going to get to 50 or below, but it's certainly one that I will keep an eye out on. Next question from Lucas on Semler Scientific. When I looked into them, they engage in the provision of technology and software solutions to improve clinical effectiveness of healthcare providers. When I looked into this company, pretty much everything checked out. They have solid growth, they have a solid balance sheet, good management that's not issuing shares in the most recent years. My issue actually just lies with the industry that they operate in, period. Operating in both software and healthcare, those are two incredibly complicated and competitive industries, especially when you're looking at a smaller company. For me, you would have to understand what gives this company a competitive advantage that other companies just can't match. And anything in software has to be incredibly obvious to me, or I'm just going to completely stay away from it, because picking a winner out of 30 other companies that are doing something similar, and they all often look great, is just really hard to do. And I put it in my too hard pile, especially when you think about software. The reason why there's so much competition is the barrier of entry is essentially non-existent, meaning anyone can come in and do their thing. So you've got to have something extremely clear about why they are better than the rest. And when you throw in a piece of healthcare and medicine, it's just an area that I would say I don't have a lot of expertise in to understand why is this thing that they make better than everyone else, and are there going to be problems with it? Are there already problems with it? Are they still going through any FDA or any legal process that I need to know of? What drugs do they have in the pipeline? I know that's not necessarily the case for this company here, but it's just one that I don't have a lot of knowledge on. And so I'm going to stay away unless it is completely obvious. So for me, this is one that I'm going to stay out of, although you could be certainly right, as everything, at least from a number standpoint, seemed to check out. Looking at the next comment, asked to look at Perrigo, PRGO. They recently started selling over-the-counter birth control, which should grow their profitability. Trump said that he will not ban the approval, and insiders are buying at 52-week lows. This is one that I've actually looked at quite a few times and passed on each time. They have free cash flow and revenue that has been flat to down over the past 10 years, which is obviously not something to love. And they also have pretty low ROIC with a median of only 6.25% since 2005. So if they were to get back to growth and get to $800 million in free cash flow, which is just a little bit below their all-time high, in the next 3 to 5 years and get a free cash flow multiple of 16, that would get you at about a 250% return, but it feels like this is a pretty low quality business. And just to get there, it would need to 3x its current trailing 12-month free cash flow just to get that return, which is still below my other options that I have out there, like I mentioned before. On another note too, I actually remember this from listening to Tom Hayes. So if you guys haven't heard of him or checked him out before, please do so. You can just look him up, hedge fund tips, pretty much on any platform, and he will pop up for you. But I remembered him mentioning this company and their CEO, so I wanted to take a look because they just got a new CEO. He actually came from Bayer, which during his time there, free cash flow went from $5.54 billion to $2.37 billion. Not a great track record, to say the least. This is a cheap stock and it could work out, but I will be staying away. It's just been chronically falling off, and their CEO that's coming in does not have a great track record. Things could work out, it could be great, but for me, it's a pass. Last question here. Pedro asked, I would love to see a video on my option strategy. It seems really conservative, but lucrative as well. I may do a full video on this on the future. Not 100% sure on that, but I thought it would be helpful to include a quick idea on this today. I currently use options in two cases. First, in only the most extreme of dislocations, like when I entered FXI near the bottom of the low in January of 2024. And second, when an obvious fundamental shift has occurred, like TLT, when the Fed announced they would be back in the market buying $35 billion in treasuries per month. These are generally the situations that I use them now, only in the most extreme of dislocations or when there's a fundamental shift that will change things. I may actually slowly start to phase out options as they include the issue of needing to get timing correct. Not just direction, but timing. And it's very, very hard to do that when there are as many factors that go into it like the stock market has. So for me, I may actually slowly phase this out, although when I get more capital and it can be a very small piece of my portfolio, I might start to include them to increase position sizes in just some of the larger companies that I own. For example, Baba would be a good example of this. If I had a lot more capital, I would purchase, an option maybe a couple years out that gives me plenty of time. But even then, it still comes with a lot of risk, and you want to be very careful when using options. I promise, I have learned from experience here. Stay away if you don't absolutely know what you're doing. And even when you do know what you're doing, you almost have to plan and say, even if this goes to zero, I'm still positioned and it's a small enough position in my portfolio that I will still outperform because of these high quality companies that I own. Options, you just never know. Just like nobody probably would have ever guessed COVID was coming. Nobody could have really completely understood exactly any market move that's going on. There's just so many variables that go into it, and getting timing can be incredibly difficult. So hopefully this was helpful for you guys. Remember, again, go check out my Substack that I linked down below. Just getting going there. It's completely free. Subscribe to that. You'll get it every week at the same time as these videos, coming out on Saturdays, and that will include a lot more detail about what I'm going through and learning, my positions, changes in the portfolio, news, all that kind of stuff. So with that, guys, I will see you in the next video.